Bitcoin's next move hinges on economic data. Here's a look at what I'm looking at, what I'm watching, and hopefully we can find some clues along the way to help us navigate what is about to happen here. Big things potentially happening today, actually within the next 30 minutes or so. We have, the Bureau of Labor and Statistics is putting out some new revisions here shortly. So before I jump into that, real quick, as always, it's great to be back. I appreciate all of the messages and calls to get me back here. Was out of town last week getting my kid to college and got her settled in, and now we are back in the groove. We did a nice show yesterday with our blockchain banter friends. Hope you caught that. If you didn't, don't worry, I'm going to cover some of those things we went through in the show yesterday and expand on it a bit more here today. So, first things first, if you love the streams, and I appreciate the comments over the weekend. If you love the streams, do me a favor, just, smash all the buttons, hit the like, hit the subscribe so you don't miss any of them. And by all means, share comments with me. I love them. I respond to each and every one of them or engage with them. Either way, they help me grow the channel. So I would say if you were surprised by yesterday's move, pump in the morning, actually pump after the candle open, and a rejection from the 50-day moving average, you probably haven't been paying close enough attention to what's really been happening here. So let's open up on the candle chart, and in case you missed that move, we can expand on what I'm talking about here. Yesterday, we saw this kind of a ugly candle here. Was looking good in the morning. Is actually looking good after the Monday close. Monday was a good candle, but Tuesday opened. We saw this rally past the 21-day moving average. That was encouraging to see, but nonetheless concerning. Whether or not we were going to be able to hold that, and a perfect rejection at the 50-day moving average. And like I said, if that surprised you, maybe you haven't been paying attention to this, or this, or this, or this, or this. Okay, we clearly have very strong resistance at the 50-day moving average, coming off of 1, 2, 3, 4 death crosses as the 21-day moving average has plummeted because of this rapid price erosion, right? That's why this happened so fast, because price came down so fast. Moving averages, of course, are lagging indicators, but this is why we've got this death cross, this series of death crosses, I should say, and this is why we have resistance here, strong resistance at the 50-day, even strong resistance at the 21-day, as you can see. And a bit of consolidation here. Consolidation is often good to see. I like that. But the reason, in my opinion, that things are holding right here, at least one of them, is because the market is awaiting this economic data, right? So if you're not familiar, BLS is the Bureau of Labor and Statistics. This is last year's revision, by the way, so don't panic when you see these numbers. This is last year. But basically what they're doing is looking at the prior year and revising all of the employment data that we've had over the past year by sector. So we're going to see that here in about 15 minutes. The estimates have literally been all over the freaking place. I mean, like from like 300K, 300,000 jobs up to 1 million jobs. That's a pretty big range, right? And so my thought is that the market is not going to like a big number, because it is going to fuel fears of hard landing, a spike in unemployment, and another spike in unemployment. Well, we got a blip. I wouldn't call it a spike, but that's the concern. The recessionary fears are the concern that the market has right now. So with these numbers coming out today, as usual, we get knee-jerk reactions to this data, as typically happens with economic data. But we also have Fed Chair Powell speaking at the Jackson Hole Symposium on Friday, which likely is going to give us, or at least hopefully going to give us, some more clarity on where things are headed with the Fed. Obviously, a quarter point is baked in. Quarter point rate cut is baked into September at this point. The market is expecting that. The question is the Fed going to deliver that? And in light of this new data, because we know the Fed is data dependent, and we have a significant amount of data coming out today and more between now and September, of course, but specifically with what's happening today, Powell will be able to speak to that on Friday. And if he will at least, he rarely commits to anything, right? Unless it's outlandish, right? Or completely off the table. But he likes to telegraph his intentions. He does not like to surprise the market, but he also doesn't want to give us every detail. So, or paint himself in a corner where he has to do something because he said he would, because the data changes week after week, month after month. So, with that in mind, could we see a quarter point cut in September or a 50 basis point cut in September if they are indeed going to cut? And, how is the market going to respond to that? My expectation, and I'm no economist, but my expectation is 50 basis points kind of telegraphs that things are worse than some may think or than the Fed previously thought. So a 50 basis point would mean, hey, we got to be more aggressive because we're concerned about a hard landing. Quarter point would be, hey, we get to stay slow and steady and methodical and control this landing and hopefully get a softish landing. So that's what I'm anticipating. Market doesn't care what I think. Market doesn't care what I anticipate, but that's what I'm watching for. So in the meantime, what can we conclude from other data surrounding this? Because no single data point tells us everything. One thing we do know is that order book liquidity, and especially if we zoom out, we can see that we're still facing strong resistance above 70K. And while we do have some good depth on the bid side, the depth is good to see. But the problem is we don't yet have a high concentration at any level close to the active price range. We don't have a high concentration of bid liquidity on this side. Now, what we're seeing on the ask side is eroding, right? So back in March, we were upwards of 75K just at, right here, and another 55K. That's well over 100 million in ask liquidity right above the active trading range, and we saw it even bigger than that in April, May, June. And so now we're looking at again, this is eroding because these asks, many of them, well, some moved up, some disappeared, but some has dropped into the range. A lot of it has dropped into the active trading range. So by that, it's being diffused and it's being absorbed. How is it being absorbed? Where's it coming from? Well, we've had Mt. Gox distributions going on for weeks and weeks and weeks across various exchanges. There's one, I believe, still in process now. And there have been some U.S. government seized coins moving around. Not sure that the U.S. government coins have been distributed, but we do know that Mt. Gox distributions are happening. And largely, I think a lot of that is the majority of that is almost done. So there might be, I think there's going to be another round after this current one. And so until we see a deep concentration of bid side liquidity that outsizes this, it's going to be difficult to penetrate this. So when are we ready? When do we get there, right? I think that we're just waiting on this data. The market is waiting on this data to determine if we're going to sit here and we're going to consolidate a little longer. Are we maybe going to grind down a little lower? We have a series of lower highs and lower lows, which, coming off of 4 death crosses, that's no surprise, right? The question is, are we going to see, are we going to see another lower low from this 49.5, or is this it? And so conceivably, as we've seen historically, after death crosses like this, especially, ones as drastic as this, there's a couple of places on the chart where I see some similarity. One of them is back in 2023, where we had the death cross, we had this big candle, right around that, and then consolidation before ultimately breaking to the upside. That took quite some time. This was August through October until we broke. If we go back, but look what followed after that. That was fantastic. If we go back to 2019, we also have a series of crosses where the moving averages, where the 21 came through everything. We had a consolidation here. We had a spike, really turned into a fake out, and then broke down again here, right? Consolidation, back up, the test, and we did have another, kind of a second mid-cycle, kind of a mid-cycle top here. I personally think that the COVID crash was kind of an anomaly. If we didn't have the COVID situation going on, there's a chance that this could have continued to trend upward, and done something like so, right? But obviously, COVID changed everything. But we could have seen something like this, certainly. So COVID knocked us back a little bit, but we had a nice recovery. So the question is, are things more akin to this, or are things more similar to what we've seen here in 2023, where we had a consolidation and then a big move up? Remains to be seen, right? So what are some other clues that other things that we might get some clues from? Well, how's those ETF flows going? Not so great for the ETH side, that's for sure. Kind of disappointing, to be honest with you. But on the Bitcoin side, we're still seeing some accumulation here of the Bitcoin ETF here from these institutional traders here over the last 4 consecutive trading days, while price has been in this range. That's notable. Also notable, in my opinion, is what's happening here with order flow. And I'm going to take it in a little shorter time frame here, around the year, and we can tell you that, I've said many times, I've shared this with you, I've been looking at this at fire charts since before we put it on the market in 2019, and since we started, I can tell you that purple whales have had the largest influence, the greatest influence over Bitcoin price. Even though brown whales are larger order sizes, the reason that purple has had more influence is because of the volume, right? So brown makes bigger orders, but they make fewer of them, a lot fewer of them. And so this is why I focus on purple. Now, also worth noting that brown mega whales, purple whales, every large order class can disguise themselves as smaller orders, and they often do. Sometimes to disguise themselves, sometimes because they simply have to, because liquidity is too thin to make large mega whale size orders without slippage. That's why you see these brown whales often making their orders when they have liquidity to buy or sell into, because that minimizes the slippage. So let's zoom back out to the 1 year here, and we can see that purple, sure, there's buying and selling. Sure, there's dips being bought and rips being sold. But overall, net has been accumulating for much of this year. And that can be seen by isolating. And, it happened. We know things really started around Christmas time. But this was all euphoria and anticipation, speculation about the spot ETFs. They were launched here. Obviously, things were knocked back a bit with all of the grayscale selling, and then things stabilized, and the rest is kind of history, right? So we often say that the best time to buy is when price is going down, and the best time to sell is when price is going up, because you're maximizing your profits, you're minimizing slippage at that point. So it makes sense to see some buying happen while there is a bit of a downtrend. But we're downtrending in a range, okay? And this is at this point feels like a potential consolidation range here, right? We've had several of these consolidation ranges through the year. We've had them at 25 to 30K. We've had them at gosh, where's my stuff, man? Let's see. We've had them. Well, this is my master chart. Let me go back to this. Pardon me. I gotta get out of the trading view screen. That takes me back to death crosses. That's not the chart I want. The chart I want, we'll go to this one. We can see the consolidation ranges, right? We had the 50 to 52K range, we had the 40 to 45K range, we had the 25 to 30K range. And so chances are if we do get a big correction after these death crosses, and that would be kind of akin to what we saw back in 2019, right? One more pullback before the move up. So as you can see, trend precognition showing us on the intra week on the daily, that we had one day up, we got one day down, and things are still trending down. So we could see this continue to trend down as we head towards Friday and Fed Chair Powell's comments. So this does not mean that price is necessarily going to dump. What it means is price is not likely to exceed this level here today. This could change tomorrow, but I'm looking at this A1 slope line, which also seems to be heading downward, trending downward, which means unless we see a reversion, a big spike here, and this reverts, that we could see potentially a short signal from the A1 trend precognition algo as well. So that's kind of what I'm watching for here on the short term. But to me, at this stage, it's the macro picture that counts the most, and that's why I am patiently waiting. I did sell a little bit of the last scalp or the last entry on this wick yesterday, but to recycle, like 25%, to recycle on the pullback. So might we get a little more? We've got some data coming out in the next couple of minutes that might send things moving. At the moment, you can see that price is moving ahead of this economic data that's due out here. And is this the fake out move or the real move? In my opinion, the real move occurs after JPow speaks on Friday. So I'm going to leave it right there, guys. If you have something that you would like to discuss or share in the chat, by all means, share a comment, and I'll do my best to get back to you and address that. And if you like the streams, by all means, please share, please like and share and subscribe so you don't miss any of them. You can see at the moment, we do see some buying to push price up. This is likely just whale games ranging here. We do have a bit of plunge protect 7.5 level that might help keep things pulled up. But if this data is bad, we could see a potential rug pull. So be mindful of that. Going to wrap it right there, guys. Have a fantastic day. And as always, trade safe, my friends.